China's real estate market is crashing, and it's bringing the whole economy with it. Property prices have been falling for the last 12 months in a row, and last month was the highest decline in over a decade. The CCP is scrambling, trying anything and everything to stop the freefall. Only time will tell if it's too little too late. Many experts believe that China may be heading for the same fate that Japan faced in the 1990s when its real estate bubble popped. Things got so bad in Japan after the bubble that the economy never recovered for 20 years. A situation like Japan's lost decades is something the CCP cannot afford. So today, let's go over how the CCP got here, what it's doing to help the citizens, and most importantly, are any of the new policies working? Let's start from the beginning. We already have a video on it, but here's a quick recap on how the CCP created this problem in the first place. You see, here in Uncle Sam's America, it's considered an important part of the American dream to own a home. But slowly, it's getting less popular among newer generations to do so because of, well, affordability issues. China, on the other hand, they're different. The importance of owning a house has only gone up in the past couple of decades. Real estate is one of the asset classes that the public trusts more than anything, and real estate ownership has a very important cultural significance for the Chinese people. Families use real estate as a way to plan for their retirement. Guys with real estate are considered attractive choices for marriage, and the amount of real estate you own is directly related to your social status in society. Considering all of this, you can see why real estate prices have continued rising over there. There's a high demand for real estate because of all of these factors. And coupled with incredible price rises in the past, you can see why everyone wants to buy houses. It kind of reminds me of the 2008 US housing market, where everyone wants to buy real estate because real estate prices only go up. The rush to buy houses was so huge that the developers were selling out complexes before even breaking ground for construction. However, even after construction finished, apartments just sat there empty because they had owners but no habitants. Demand was so high because everyone wants to buy their second or third home to get rich on the real estate boom. So supply increased drastically to match the demand, but a lot of these homes were just sitting empty, as owners were only buying these places in hopes of price appreciation. Because other asset sectors weren't as accessible and developed, real estate was the only thing people invested in. Based on one data set, Chinese families had around 70% of their wealth in real estate. Yeah, you heard that right, 70%. Not much for diversification, I suppose. 30% of China's GDP depended on real estate. Imagine if something were to happen to the real estate market.
Evergrande faced liquidity issues as it struggled to meet its debt obligations.
Evergrande is also the world's most indebted developer.
Recently, there has been too much bad news surrounding this name.
The firm has more than 300 billion in liabilities, and it may actually be on the hook for more debt.
Many developers, like Evergrande, took advantage of this boom in China's real estate market and became one of the largest developers in the country. At one point in 2018, they were actually the biggest real estate company in Asia. When people look at something that big, they just assume it's all legitimate. Oftentimes, though, that's just not the case. I hope you guys learned that lesson after the 2008 crisis. If one had just looked under the hood, they would have realized that some of the practices happening at Evergrande were far from appropriate. Now, due to the sheer scale of the company, a lot of practices were quite complicated. But here's my attempt to simplify it. Remember earlier how I mentioned that FOMO into real estate was so bad that people were buying houses before the construction even began? Usually, a company like Evergrande would lease a piece of land from the local government. They would then turn around and sell the houses that are supposed to be built there and receive full payment for the houses before even breaking ground. Companies would never have any issue selling out as the demand for real estate was just so high. People were more than happy to take out mortgages and buy houses just in hopes of owning real estate someday in the future. Now, the big problem that starts here is that companies like Evergrande wouldn't usually use the money from the sale to start construction. No, they would use that money as down payments to buy even more land, so they can sell even more apartments for the future. Now, this is already a huge problem. This should not have been allowed in the first place. Any unbiased person can look at this system and figure out that this is not going to last. This is exactly the job of the CCP, to regulate the market, but they had passed on this responsibility to the local governments. This is where another problem lies. Local governments were directly benefiting from these real estate pyramid schemes that companies like Evergrande had going on. You see, in China, one of the big ways local governments make money is by leasing land to developers like Evergrande. This meant that the more risk these property developers took on, the higher the bids on the land that the government was leasing out. Around 50% of local government's revenue was coming from leasing out land. The same government that should be protecting its citizens from these risky practices is benefiting heavily from these so-called risky practices. This is a prime example of perverse incentives. We don't even need to get into the corruption that goes on around these land leases. This is one of the main reasons why China's real estate bubble has gotten so big. Regulators were always slow to step in because it was directly benefiting them. The CCP saw where things were heading and tried to get things under control by implementing the 3 red line policies for property developers. But it caused more problems than it solved. You see, the goal of the red lines was to stop the developers from taking on too many loans and becoming over-leveraged. Which sounds like a good idea, until you think about the fact that these developers need the loans to finish the construction projects they had started. Remember how they would pre-sale homes and use the money to buy more land? That meant that loan money was actually being used for construction for apartments and houses that people had paid for already. When the 3 red lines came in, banks became more strict, and that meant developers couldn't get the funds to finish projects. This started the domino effect that is still playing out to this day. Projects were paused, debt payments were missed, and citizens got angry. Once the news hit the global media, people started looking closer at China's real estate bubble. Everyone realized that it was a time bomb, and the CCP's 3 red lines had started the timer. Things were about to get much worse. People found empty, unfinished houses, malls, and cities. That's right, a developer named Greenland actually started building a city full of French mansions in hopes of staying ahead of the growing demands of Chinese buyers. Not one mansion, but a city full of mansions. The Wall Street Journal has a full video on this, and I highly recommend you guys check that out after this video. As funds dried up, the city is now left abandoned and unfinished. Some of these homes people actually prepaid for. This problem is not unique to just the city. Currently, there are over 20 million pre-sold homes in China that are unfinished. Now, we usually cover nations on this channel, where figures are in billions and trillions. So in comparison, 20 million doesn't even sound like a lot until you pause and see that these are homes we're talking about. Even if we assume an average price of $50,000, that's almost $1 trillion in unfinished homes that people have bought. Some people are still being forced to pay their mortgage on these loans, even though they see no hope for their home ever being finished. Even for the world's second biggest economy, that's a lot of money. And that's why we see protest videos like these.
Many home buyers are desperate. Some have taken to street demonstrations.
Evergrande's collapse triggered protests by homeowners, furious that units they had started paying mortgages for weren't being finished.
Many borrowers have been left in dire straits.
And all signs indicate things will only get worse.
Now, in China, people don't often protest because they know the consequences can be drastic. I'm sure you've heard of the Tiananmen Square massacre, where nothing at all happened in 1989 if you ask the CCP. But when people and families went out on the street to protest the housing situation, even the CCP realized this was a big issue. So they tried saving the free fall of the real estate market. The Beijing government rolled out a bailout package that decreased the interest rates on mortgages and reduced the down payment requirements. The hope was that this would make it easier to get loans and buy new houses. If people started buying houses, then developers will get the funds to finish the projects they had paused. Sounds like a good plan, until, you think about it a little deeper. You know how we talked earlier that people in China were not really buying houses to live in? No. They buy them as investments, in hope that prices will continue going up and their wealth will continue rising. 30% of home sales were just people buying a second house, and 10% of home sales were people buying a third house or more. But they had no reason to believe that prices would fall. In fact, for most people, their entire lives, real estate prices only went up. Now, though, things were different. After the 3 red line policy, the music stopped, and real estate prices had started falling. Even with relaxed mortgage rules, why would anyone want to buy houses as investments after what just happened? Human psychology also only compounded the problem here. As you might already know, we as humans are more afraid of a $100 loss than we are excited about a $100 profit. That's loss aversion for you. This means that even people who can afford to buy real estate don't want to buy because they are more afraid to lose money. Before, real estate was the most reliable investment vehicle in China, and now people see it as the least reliable investment vehicle. So only people buying houses right now are the ones who need a house to live in and can afford it. But that's not really a lot of people. Here, we learn why it's so dangerous to be too dependent on one sector. Remember how I said earlier real estate is the single biggest contributing factor to China's GDP? Well, about that. The economy is great when real estate is great, but now that the real estate market is crashing, the economy as a whole is feeling that pressure too. As people see their real estate portfolio crash and burn, they feel poorer, so they spend less money on discretionary stuff like eating out, shopping, celebrating Xi Jinping's birthday. I'm just kidding about that last one, but hopefully you get the point. Now, in any economy, one man's spending is another man's income. And if people stop spending, that means businesses earn less. So now they have to lay off employees, which in turn makes people now spend less, which in turn hurts more business profits. It's like a dangerous downward spiral that's very hard to stop, even for an authoritative government like the CCP. It wasn't just becoming a real estate crash that was hurting China's economy. It was also deflation. You see, unlike the West, which turned on the money printer to deal with the COVID recession, China went a different route. The real estate market bubble was already popping. The CCP didn't want to print money and fuel that bubble. This led to deflation, which is, as the name implies, the opposite of inflation. Prices are going down instead of going up, which may sound like a good thing to you and me, but for an economy, it's a bad thing. Once everyone is thinking that prices tomorrow will be cheaper than today, then no one wants to spend money to buy stuff because they believe tomorrow they can get it for cheaper. So again, businesses make less profit, they lay off more people, and spending goes down even more because more people are unemployed. This is a bit similar to what happened in Japan in the 1990s, when its real estate bubble popped. Many economists believe China may be heading in the same direction, and if the CCP doesn't fix the problem, things are gonna get ugly quickly. But before we talk about that, let's quickly go over one last policy the CCP just implemented to revive the real estate market. That's giving money to banks and local governments. Earlier this year, the CCP launched Project Whitelist that allows city governments to recommend residential projects to banks as being suitable for financial support. Basically, the CCP is telling banks that they can loan money to some developers so that they can finish paused projects. The project comes at a time when developers do not have the money to repay banks, and so existing loans need to be replaced with new loans or just extended. This is also putting pressure on Chinese banks that were already struggling because of the real estate crash. If banks get too much bad debt on their balance sheet, people may start losing trust in the bank's ability to stay solvent, and that's a huge problem in itself. I'm sure most of you already know how the modern banking system works, but here's a quick overview for everyone else. Banks usually loan the money that depositors deposit and hope to earn interest on it to make a profit. Usually the reserve requirements is set by the central banks. So let's say it's 10%. This means that whenever the banks get $100 in deposits, they're required to only keep $10 in the vault, but they can loan out $90 and charge interest on it. This is just a simplified example, but these types of transactions happen millions of times over in an economy, and that's basically how the modern banking system works. For every $100 in deposits, banks are able to create $1,000 of money in circulation. Now, this system is actually pretty great. In the past century, a lot of economic growth is in part thanks to this fractional reserve banking. But the only way this works is if the depositors have trust in the bank's ability to keep their money safe. Now, if too many of these loans that banks are giving out become worthless, then that trust starts to fade. This is why the US enacted strict lending regulations after the 2008 crisis. so banks are careful with whom they lend to. Now, even with the CCP's new policy, banks are being careful as to which developers to extend the loans to, because they know that these are highly risky loans. This, in turn, is hurting the economy as paused projects means no more new real estate sales. This is where the big headaches lie for the CCP. The Chinese economy is heavily reliant on its financial sector and the real estate sector. Real estate represents around 30% of China's GDP, like I said, while 7 out of 10 of the top companies in China are financial institutions. The crash is spreading across the Chinese economy at a rate never seen before in the world. For comparison, when the US had its crash in 2008, real estate was only around 6% of the total GDP, and in the 90s in Japan, real estate was only around 9% of total GDP. So for China, any hit to real estate means a much bigger impact on the economy, even bigger than Japan's 1990s crash. Talking about Japan, when its real estate bubble popped, it led to a 20-year-long stagnation in the economy. Economists believe China can face a similar fate if things aren't handled carefully. Now, Japan's crisis was complex, and it deserves a video in itself, but here's a simplified overview so that we can talk about the similarities with China's current crisis. Much like China in the early 2000s, Japan's real estate market was booming before the 1990 crash. In fact, at one point, the land value of Tokyo was the same as the land value of the whole of the United States. There were multiple reasons behind why real estate prices soared so much, but the big one was the fact that their interest rates were near zero in the previous decade, which led to investors plowing money in real estate for higher returns. But when this bubble got too big, the central bank was forced to raise rates, which led to one of the most disastrous crashes in the Japanese economy. People were left paying mortgages on properties that were now worth less than the loan that they had, which led to belt tightening across the country and spending decline, just like it's happening in China. The downward spiral of deflation was so bad that it took Japan 2 decades to get things back to new highs in the stock market. GDP per capita is still around the same $40,000 that it was in the 1990s. To many, it seems like China may be heading in the same way. In fact, things may be worse for the CCP. Japan was less dependent on real estate than China is today. That means a crash in the Chinese market could have disastrous effects. But the CCP does have the benefit of knowing what happened to Japan in the 1990s, and hopefully lessons from the past can help the communist government manage this crisis. Because if the CCP fails, billions of people will suffer.